Hey guys, welcome back to another market update. I'm Chris Cucoch from Royal LePage Signature. Right off the bat, I want to talk about the Bank of Canada. This week, the overnight rate was lowered by 25 basis points. So that means that the variable rate mortgages should come down. Now, the fixed rates are not going to move because they're driven by the bond market rather than the Bank of Canada interest rate. All right, let's see what's going on in the stats. Across the board, for the first time this year, our year-to-date sales are now tracking lower than 2023 with a little over 30,000 sales. We're just down about 2.5%, but that's a number that I think we need to keep our eye on. We also have quite a bit of inventory with about 21,000 listings, which brings our months of inventory a little over 3. So we are, depending on which economist you talk to, into balanced market territory. We had about 7,000 sales across the board, which is down significantly, almost 22% from May of last year. The average price of a home was $1,165,000, which is down about 2.5% from last year and up 7.5% from the start of this year. And when we take a look at the month-over-month sales, you can see that we are continuing to trend upward. We started at about $1,084,000 at the start of the year. We had a little dip in January and the early part of February, and we've been consistently climbing up since then, with prices trending upwards, although they're not keeping up with where they were at last year. And we have a similar situation in Mississauga with 638 sales, which is almost 24% less than we had of May of last year. And our year-to-date sales also have, just for the first month of the year, started to track under last year. Listings in Mississauga are also up almost 80%, leading to 2.9 months of inventory, which is just bordering on that almost balanced market territory, just slightly into the seller's market side. And finally, the average price in Mississauga is tracking a little under 1.1, which is down about 4% from May of last year, but is up over 15% from the start of this year. And when we look at month-over-month numbers, it's a very similar situation in Mississauga as we have across the board. Starting with about 950,000 at the end of the year, we actually had a jump up in January, and the dip happened in February in Mississauga instead of January. But since February, we've been pretty steadily climbing up a little bit at a time, month over month. Okay, let's have a quick look at those Mississauga micro markets. First, the detached houses. In the month of May, we sold 263 detached houses, which is down about 17% from last year. The average price of a detached home was about $1,563,000. That's down about 5% from May of last year, but up about 13.5% from the start of this year. We had about a 70% increase in the number of listings to 710, which leads to about 2.7 months of inventory, almost a balanced market. In the semi-detached, we only sold about 68 in the whole month of May, which is down about 33% from last year. The average sale price was about $1,025,000, which is down about 9.5% from last year, but up about 8% from the start of this year. We've got a similar story here. We've got about a 50% increase in the number of listings to about 120, and we've got about 1.8 months of inventory. In townhouses, about 116 were sold, which is down about 37% from last year. The average townhouse sold for about $860,000, which is down about 6.5% from last year, and it's up about 9% from the start of this year. In townhouses, we had an over 160% jump in the number of listings to 440. Just keep in mind that most of those listings are condo townhouses, not freehold. And with all those listings on the market, we have about 3.8 months of inventory, which is very much balanced market territory. Finally, let's look at the condo apartments. The number of sales were down about 18% to 183. The average sale price of a condo was $645,000, which is actually up about 1.5%, and it's up about 6% from the start of the year. We had another big increase of over 80% in the number of active listings, which gives our months of inventory about 3.6. So again, into balanced market territory. So what does this all mean? Basically, in the month of May, we had a little bit of a divergence between supply and demand, where the buyers, I think a lot of them were sitting on the sidelines waiting to see if the interest rates would go down, and the sellers were looking for an uptick in buyers. So a lot more houses came on the market. So we have a little bit of an unbalance right now. Actually, it makes it what we would call a balanced market, but there's a lot more houses on the market, for the normal amount of buyers right now than there usually would be. I suspect the 25 basis point decrease in the interest rate should bring some buyers off the sidelines and back into the market. I also don't think we're going to see a ton more listings come. So I think that this is going to level out a little bit over the summer and into the fall. I think we're going to have a super active fall market this year and maybe a busier than normal summer just because of all the pent-up demand that's been waiting to see what happens. As far as the interest rates, when's the next cut coming? I don't think they're going to cut it in July. Possibly, depending on what goes on in the economy, we'll see it coming out towards the fall. So if you're buying, do not wait for that to happen because there's going to be a ton of competition when these rates start coming down. If you're selling, that's good news for you. Maybe it makes sense to wait till the fall. A little bit less competition as far as other properties go. Buyers have a little bit less choice and it should put some upward pressure on pricing. At the end of the year, I think that we're still going to finish a decent percentage up from last year. My best guess is somewhere in the 5% range, but time will tell. We'll see what happens. Thanks for watching this month's market update, and I'll catch you in the next one. Have a good day, guys.